So that's what you're faced with the uncertainty.
Yeah, right. Like at the end of
If you
15
want to
years,
advertise,
when there's some uncertainty at the end of the 15 years.
There's uncertainty with everything.
I'm sorry, don't go abstract. There's uncertainty at the end of the 15 years when it stops being a fixed mortgage.
Yes, there is uncertainty
Don't try
there.
to-
There's uncertainty with there's uncertainty with every piece of this, just like there's uncertainty with if you invest and you buy it.
What's your variable rate right now?
We don't have a variable rate. We give 15 year, and then at the
You
end
have
of
a
15
standard
years,
loan, you said, 7% for
7%
15
for
years.
15 years.
And then variable for the next 15.
No, it changes once at the end of 15 years. It's basically a renegotiation.
Okay, well, what is your standard right now?
It would be 7% if you renegotiate.
What she's asking is,
A
after
variable.
Yes.
15 years, what is your present rate?
What is your
Seven.
present
And
rate?
Just an
And
example.
I'm saying if you came up for review at the 15-year point today, you would get 7%. You would get the going rate.
And how do you know that?
That's corporate policy.
What's your
Rock
source?
USA Capital.
From your what?
From Rock USA Capital, that's
So
So
if we
then
call
why
them,
isn't it fixed if it's
because
7%?
we can't get the finance companies, the banks, to say that they're fit for 30 years.
does that mean there's not
At
enough?
7%?
Yes. Well, remember, it's
God, there's a
104% loan, including all closing costs. The risks are incredible. So that's why the costs are that way.
So even though you're saying that you're going to have the percent change, you're guaranteeing that it's 7%?
No, I can't guarantee it would be. If I could guarantee that it would be a fixed.
Well, I thought you said it was corporate.
I said if it was the 15th year today, it would change to 7%.
Because that's what your policy is
That is
today.
the policy today. Okay?
Okay.
So there is uncertainty.
Is this a CRA area?
Certainty from CDI.
CRA, now that the CRA depends upon what banks are in this area. Okay, CRA covers banks using deposits that they get from one area in the same area that they get. So your local bank, and I don't know this area very well, to be honest with you, as far as banks. If it was a local bank that was investing in it, they would get points on CRA for investing in this. Okay? If it's a state or federal agency, or if it's a, or a pension fund, or any one of the national lenders, CRA is an applicable to them.
So you don't have any of that financing?
So what have you brought for us for numbers today, Andy? Have you brought any
I've got
details?
all of
please,
the operating costs of the community that for the last several years, and what we project, what Lou projects.
Okay.
Excuse me.
She has more questions, I'm sorry.
Before you get into it.
Yeah, thank you.
How did you find out about the sale of the park?
The broker who was a broker who is probably making commission on this, I would think. Was dealing with Lou, okay, called me and said, this community is for sale, and I don't think it's, do you want, basically to organize the residents?
And why did you say that you thought it was already under agreement?
Because
And
Lou-
why did you
because-
say you already thought the contract was signed?
Because I was under the impression, because I
Why?
believe that.
Who told you
Because
that?
Lou made it sound like it was imminent, and it's been imminent for a while. And I guess I misinterpreted.
That might happen.
Is this a broker that you know, that you deal with?
We do not have a contractual relationship. We
No, but
don't.
I mean, is this one of your contacts? a
He is
referral?
one of
A
the
referral
number of
source?
brokers that will call us. The reason brokers call us is that there aren't all that many people buying
Yep.
these communities.
That's my next question. How long has this been on the market?
I don't think it was really on the market. How do I put this? Lou would be appropriate to ask that. He's the owner. Okay?
So,
I was called a number of weeks ago, told that there was a deal that might happen here, and told, okay, here's the owner, why don't you talk to the owner? And I called the owner and I said, this is what we do, basically, this is what CDI does, and if you'd like to sell it to the residents, then I'd love to talk to the residents. I can't guarantee you anything, but
So the broker didn't even mention to you how long it's been on the market? Or
No.
that it just came on the market? Or
he just said that Lou was interested in selling the community.
And what is the price on the market?
$1.3 million.
On the
Now, a
market?
question in regards to that price.
Yes.
Maybe I misunderstood, but he had stated it was 1.50 because he wasn't going to include the commercial.
Right.
That's what he purchased it for.
Yeah, and there's been some gyrations, I guess, and Lou is a better man to talk to, but you have a right to buy the whole property in general, okay, or to match the same offer that a third party is making. And I think that third party was going to buy this and the front portion. Again, they're going to buy that for $200,000. I don't know how those negotiations ended up, he thought that it would be better if, and that's, well, you know, he said, I'll sell the residents of the community for 1.3, and I'll sell that for $200,000.
No,
If the
he
residents
didn't
wanted
say
to buy this.
200,000, he said 100,000.
Pardon?
He said 100,000.
Well, I'm sorry, I don't remember because.
You don't remember much from last week, do you?
So he is on the market for 1.5.
I don't know that. So since I'm being recorded, and I don't know exactly what's being in the market for. I know he said today he was imminently going to sign this is what he said, a purchase sale agreement that would include the park and front as two different purchases. Pardon me?
You need to see that agreement.
You do, because you know, this is only to see whether you're interested. I'm
So
not asking anything.
How are we
So.
ever going to see an agreement when you don't know who it is or where it
You
is?
will.
Lou knows
Because
who
there is not
who
an
it
agreement
is.
in effect yet.
I think the other thing he's saying is that he's going to sell it no matter what. And if you guys want to buy it, then that agreement, you either match that agreement or just buy it.
You mean he's going to try to sell it no matter what?
Yeah.
Yeah.
That's what he's
Yeah.
saying.
Based on the price and the time it's been on the market and the economy, anybody who's purchasing anything is going to negotiate a price. So he seems to be conveying to the group that that is the set price and there's no negotiation.
That's what he's saying.
Yet he is also saying that there hasn't been an appraisal done. And you can't even loan money unless you have an
The only
appraisal.
appraisal, if you were to go and purchase it, the bank, the finance group, Rock Capital, would require an appraisal of it.
Right.
But not
And who would pay for that?
they would pay for it up until the deal closed, and then you would pay for it as part of your closing. Okay? Just like the engineer. So appraisals aren't done on the back. Appraisals are generally done in done up front. They're done on the back to basically solidify.
Well, if there's an appraisal done, if he's got a price out there for 1.3 million and the appraisal comes in at 750, you got a problem.
Then first off, you wouldn't get the loan, and you wouldn't,
Correct.
and you wouldn't lose anything because you'd have no money spent.
So he
You
has
would
to
lose
have
time.
some idea of what the value is,
Well,
and not
yes.
just a ballpark figure of what he wants.
It's because he's been, again, he says he's been negotiating with someone. Also, the way.
So negotiating sounds a lot different than actually signing a contract, like you said last week at the very beginning of last week's meeting.
He could be negotiating the price with you.
He is negotiating price.
But negotiating is much different than you actually saying that you think he's actually signed the
I
contract.
didn't say that, he
You didn't say
corrected
that.
it, and I apologize.
You didn't say that.
I did, and I can't, you know,
Actually, what he said was that he thought there was an agreement in place, and Lou said no.
I'm sorry, you said it's actually under.
Right.
You said it's actually under agreement to sell. You said, as far as I know, Lou and his partners have signed an agreement to actually sell the community to somebody.
I said that.
So you did say that?
If you, yes.
Oh.
And if you read that later on, and you I apologize, because Lou said, no, I didn't sign anything.
Well, you see how that's slightly misleading to us. It's
Yes, but
slightly,
it was,
you know,
but it was clarified.
slightly misleading.
Okay.
Well, I'm glad you clarified it eventually.
We did.
Yeah.
You know, we can call him and find out the status of that.
Has he found out the status of the name of the company?
He doesn't have to disclose it until such time as he has actually signed the purchase and sale. And then he has to disclose it to you guys, not to me. And actually, I'm not even sure he has to disclose it to you guys unless you have an association with 51% of the residents.
But if he sells it for $1 million, then we can get it for $1 million.
Yes.
So you're saying the current park association we have right now, you're saying that doesn't have the right to first refusal?
No, it doesn't.
Why not?
Well, I'm not a lawyer, so it's
No,
not.
excuse
In my
me.
opinion, it doesn't.
Whoa, okay. We have two different things going on here.
Yeah.
All right? We're being offered the park at the 1.3 million. Okay? Now,
That's only if he sells it for 1.3 million.
Yeah, you don't even know if that's a fair
we're being
price.
offered
Actually,
the
he's
park for
offering it to you.
1.3 million.
Okay, yes.
We're being offered the park for 1.3 million. Now, if within a short period of time, Lou gets an agreement from someone else to buy it for 1.3 million, then the second part of this goes into effect where we have the right of first refusal at that point in time. At this point in time, the only thing we have the right to do is negotiate with him, all right? And as to your question here about Andy saying it's actually under agreement, when Lou got in here a couple of pages later, Lou says specifically to Andy, or Andy says specifically, then I got that wrong because I apologize. I thought it was under agreement, and Lou says, no, it is not under agreement.
Right.
So it was just an error that was corrected a couple minutes later.
So I assume that, so that's why I'm telling you today, he said it was imminent.
Well, that's why I like to see things. In other words, Andy, how do I say this? I like to see things in writing. When you put them on paper, they can't be changed. But when you speak them and you say things like that, it can be misleading or misconstrued. Do you understand why that's
I understand that. I
problem?
also know that I have to talk to people to convey ideas. It's the fastest form of communication I know. I type about 42 words a minute.
That has nothing to do with that. You have plenty of time to type up a piece of paper.
I'm sorry. That's why I've talked to people so we can interact. So, but I'll leave it to Lou. Put it this way: I will leave it to Lou to state his case as to whether it's under agreement or not. At this point, it isn't, and at this point, he's offering it to you for $1.3 million. So you can either form an association and wait until he sells it. You can act on the $1.3 million. You can offer him less. You can do nothing. You can do any of those things.
Do you have comps?
What's up?
Do you have any comps?
Commercial appraisal, and I'm not an appraiser. I'm not licensed as an appraiser. Commercial, there are 3 ways that commercial is done. One is by comps. Okay. How many parks are there of this size in Massachusetts? Do you think?
You mean you don't know?
Well, you usually get a comp in the general area.
Only a couple of parks trade a year, so comps are not utilized by, at least the appraisers I know. They use what's called the income method. You guys pay a certain rent, right? Same as apartment building, allegedly. Okay? You pay a certain rent. It costs so much to run the facility, right? The difference is applied to a yield, and so a value comes from that. So an investor says, I want 10% of my money, okay? And they buy based upon that. So then you find the net operating income of the community, and you multiply it by that fact. It's called cap rate, capitation rate.
What you want and what you get are 2 different things.
What it's worth is.
You know that, right? Right now, real estate, I don't give a shit who you are, it's not selling worth a damn.
That's true. That's true.
You're full of shit if you think you can get $1.3 billion, but that's all right.
Well,
Yeah, but
put it this way.
if the purchaser wants 10% on his 1.3 mil, he can raise the rent so that he gets that 10%.
That's right.
That's the beauty of these parks to investors is you can't.
Well, you run that risk with anything.
You do.
You know, any buyer that's going to come in can do whatever they want, move everybody's trailer to the right, and so big open space on the left. He can do whatever he wants to do.
Yeah, that might be
Pay for
tough.
all of
That might be tough. That's expensive.
You've got to pay for everything.
These things aren't made to move very easily. I've heard.
It would be the owner of the park that would be paying for that.
But then everybody has to understand too that if they are the co-op and they own the property, they have to deal with all the headaches as well.
That's true.
And that you may be forced to raise rents on your own behalf as well to cover your expenses.
Absolutely.
I mean, you said you mean the CDI?
No, the
Oh,
co-op.
co-op. Yeah.
The co-op would still have to raise rents. to
Co-ops
cover
do raise rents.
Okay.
But you know, co-ops on average, I've heard, pay less in rent to their stable because
In
that
what?
mortgage, that 15-year mortgage, that's and I'm generalizing, that's generally 2/3 of your expenses.
They pay less than what?
That fixed rate mortgage is 2/3 of your expenses.
No, I'm sorry, before you said they pay less than what?
They pay less in rent
Oh.
or community fees,
Thank you, thank you.
And what is your percentage on the mortgage?
7%.
7.
Yes.
Okay.
And the first thing people say is, well, if I own a home, I could get 5%, right? You know, something like that. Well, it's not 100%, it's not on a community like this, and that's federally subsidized.
Can we get our own financing?
You can get your own financing, no problem at all.
If you can.
And with me or without me. And if you need my help to do that, that's fine.